everybody. Hope everyone survived the aftermath. What a whiplash move. Very unimpressive with what a lot of people weren't looking for, which was really not that dovish of a hike. The dollar rallied but gave it all back last night, and then some. Look at the euro. So I notice on our company Skype, which I'm seeing on my screen right now, that Grega will be in here. Just trying to get to the Dixie. And we're at that 96.40 level. Charts aren't changing for me. There's a pound. Not as impressive. Let me close this. But 96.40 was Grega's line in the sand for the bull case of the dollar. And we took it out last night. We're right back here. See what Greg has to say. This being the breakdown might be a good sell right here. Actually, you know, it wasn't that strong of a response yesterday. You look at this candle with what the Fed said. Once we took out yesterday's low, which was 55, it really accelerated to the downside. Now, these are pretty treacherous markets right now. I'd say that this was really, I mean, you go home, gold's got back most of, almost all of yesterday's losses, but look at this candle here. Let's see. Because I know we have the viewers from investing.com and their Bailey Wick is mainly stocks or ETFs, but you look at an ETF like Nugget from yesterday. Tough close to buy, don't you agree? I mean, it looked like we were going to head down, get a breakdown. Interesting, I heard from Steve on a Skype yesterday that we could have ended the correction up in gold, but he said with a caveat, let's see what happens the next 2 or 3 days and then jump on the first candle. So really, that's something I guess we need to put into our trading plan, that just because you get a candle, you need confirmation of the candle. So Nugget's probably going to challenge yesterday's highs. We'll see if gold shares can get everything back like gold has. Yen breakdown. Looks like a breakdown to me. And we're probably headed towards Andre's targets. Boy, does he have the patience of a saint to have sat in this short for as long as he has. Look at that. Down 71. Tried to hold yesterday, even weaker than the dollar. Yeah, here's some support at 1090. And then you go the weekly, pretty ugly weekly. You have the 200 at 110.32. That's probably where we're going. And we take that out, the US dollar yen is really in trouble. I thought the canary in the coal mine might be the yuan. And look, the yuan almost challenged the old high. But right now it doesn't seem to be affecting the gold. So perhaps gold now fulfills potential counts back towards 1280, which was a possible scenario. The cryptos are continuing their advance, their recovery here. But let's look at gold here. So reversal candle back here. We should get a continuation, most likely into early next year now, I would say. Sure doesn't look like a short anymore. Did yesterday, doesn't today. So, you know, you always have to be reassessing the market. I thought this was a pretty negative day, but, you know, today surprised me. So when I'm in this state of surprise, I just let markets reset and look for entries and you know what else I do? I go here. And I go here. And I go through all the pairs and all the research and analysis by the whole team. I also go here. I want to see what's happening in active patterns of play. You know, Greg has been on the Aussie for quite some time. Andre probably took some profits on that short yen trade. Let's see. Yeah, 1%. Okay, so nice trade there, Andre. Never go broke taking profits. But this is a very important part of my intelligence gathering for people that follow me on Twitter and other people that I integrate a lot of what the team does to reinforce or give me pause on my opinions. You know, it's only $1 to check it out for 10 days. We're entering a holiday period, so it's a great time to get acclimated to the site, learn to navigate around it. And it's just $1 to try for 10 days. So you'll have it the rest of the year to make a decision about immersing yourself in 2019 with us. Also, I'm thinking about our sponsor, and that's Trent and Justin at Forest Park FX. And why not get rebates on your trading? Get paid to trade, especially if you're a short-term trader. It's going to make a big difference to you if you're a day trader or scalper to either pay for the subscription or get a check every month. So you just go to Trent and Justin. They're very responsive. They'll get back to you even during the slow holiday period where usually you make a call this time of the year. You get a voicemail prompt and you won't from them. They'll get back to you within a very short period of time, probably within, an hour or so of you reaching out. So I go into this Thursday flabbergasted after what happened yesterday. I think this really is almost a front to the Fed that, Powell wanted to seem aggressive, and he was. But the market is saying big deal, and the dollar did not respond. It actually put in a failing rally on what was a surprise event yesterday. Some people thought he wasn't going to do anything, and then some people thought that he would hike but be real dovish. He still talked about the potential of 2 more hikes next year, and the market is challenging him that he may just have to do that. So S&Ps, what a disastrous December. I think it's the worst December since 1931, and those weren't the greatest days, were they? 1931.
32. At least the Dow Jones so far worst December since 1932. Yeah, and we all know what happened afterwards, huh?
Well, yeah. I don't know if we were recovering. I know the crash in 29, were we recovering? I kind of thought that this time period, Steve, was kind of analogous to 37 when the Fed started tightening again after recovering. And then they put the economy back into the tank, and it took a world war and putting people to work building arms to
not only that, the big boom in the U.S. economy following the war was also due to the fact that after World War II, the industrial capacity and ability to produce had been decimated all over Europe, right?
Yes. So a lot of money and recovery from rebuilding Europe, rebuilding Japan. So actually really gave the U.S. dollar primacy back then and turned into the reserve currency. So we had an Anglo-to-Anglo transition from reserve currencies from the pound to the U.S. dollar. We'll see what's next. A lot of people are speculating on what's next. I know, Steve, you have a very pessimistic long-term view on the dollar. What do you think is going to replace it as a go-to currency for trading in oil and commodities? And do you think it'll be a basket? And do you think it'll be an SDR? Do you have any theories on that?
No, I have no theories. The only certain thing is that the dollar is slowly losing, its sign as the world's reserve currency, but that is a very slow process, right? Let's not forget that.
Okay,
Yeah,
well,
this is not something that happens overnight, right?
Okay, yeah, nothing does. Well, some things do. Can't say.
Yeah, some things do.
I've had some things happen overnight to me. Anyway,
yeah,
you think that this dollar action today is a breakdown, and now the path of least resistance is to the downside towards 94?
We need more evidence because the initial reaction was obviously
tepid. I thought.
First of all, let's go through what happened yesterday very briefly.
Okay.
What happened yesterday is that we got a dovish hike, but it was a lot more hawkish than we would expect. So why was it dovish to begin with? Because they accepted that we have some slowing data. They did move the dots quite substantially lower. They did reduce the outlook for 2019 rate hikes from 3 to 2. Right. So there's no question it was dovish, but the question is, was it as dovish as the market was expecting? Absolutely no.
Right.
The two things that I believe shook the market and the market didn't actually expect is number one, Powell walked back a little bit of his 180 that he had done having to do with neutral rates. So if
turn off your electric guitar, you're
getting a microphone. It's a microphone.
Yeah.
Oh.
Yeah, it's Joe.
Oh. Okay, Joe. I thought you're with your rock band at night.
So one thing is that while Powell had recently spoken about us being very close to neutral, yesterday in essence he walked that back a little bit because he said that we're now very close to the lower bound of neutral. So in essence, he he left some room for more upside as the two expected hikes showed. And the second and most important, which I think the market really didn't expect, is that when he was asked about what's going to happen about the monetary tightening that the Fed has initiated, and if it's adjustable and if it will be adjusted according to the data and what's happening, he said no. We might adjust interest rates according to the data, but the monetary tightening is on autopilot. It's what we've decided. It's going to keep on happening. And the market definitely didn't expect something like that. I mean, they would expect that because I was explaining yesterday, if you remember, Dale, that the fact that Fed is reducing and shrinking its balance sheet is another form of monetary tightening, right? So they were expecting that at least the Fed will leave both those pillars of monetary policy. I mean, monetary tightening or monetary easing, or in essence, quantitative easing or quantitative tightening, and the interest rate open according to what data says. But having to do with quantitative tightening, he said that no, we're not touching that. That's on autopilot. We've decided that we're going to be reducing by, I don't remember, is it 40 billion, 40, 50 billion per month? Is it that they're reducing? I think 50 billion per month, something like that. And that's going to go on. Yeah, and that's going to go on. So the market didn't really expect that. So those two things were interpreted as more hawkish than the market was pricing in already. So that definitely shook the markets. As I had said, obviously, if we have some kind of a hawkish surprise, the market would sell off, and the market did sell off. And we actually, I'm going to show it a little bit later because we're going to have Gregor with us. So I'm going to show it a little bit later, but I think we've now reached some very, very key levels in the stock markets, and I think that we now have to make a decision. Now, having to do with the dollar, because I don't forget the question. Should I take the screen, by the way?
Yeah, go ahead, buddy.
Okay.
And
now,
by the way, I was showing Bitcoin. Great call on Bitcoin.
Yeah, I think it was,
it was good for about $800.
I think it's going to be good for more than that, because descending and ascending wedges are really, from my experience, probably the most reliable formations, and especially when you have confluences like the ones we had. I mean, the 3,000 area was support resistance in the past. We had very, very clear and indicative RSI divergence. You can call this a three-drive formation, right? It was 1, 2, 3. So, many. We had obviously a momentum loss initially. We had contracting volatility, and everything was showing that.
What was interesting yesterday? There was absolutely no reaction in crypto to what was going on all around. It really is kind of really completely a life of its own. I was looking to see if it would be pressured by that or the dollar. No correlation to anything is the way it looked yesterday to anything.
Yeah, if you remember, I had kept saying that one of the arguments that crypto funds had found about cryptos was that one of the values they can offer to a portfolio is the fact that they are uncorrelated to other assets. Now, personally, I understand why you would want something that with X correlation or whatever. Now, something uncorrelated, okay, yeah, I get the point on one sense, but on the other hand, they are uncorrelated because as far as the period that they've been popular, they've spent like a year going in a mania phase, accelerating higher, taking scalps, asking no questions, and then they've spent another year depreciating almost at the same pace, no matter what else is happening. So if uncorrelated means that one year they might be like going up frantically, and another year they might be like blowing through all the stops, I don't know.
Yeah, it's probably just a pure supply demand entity on its own. I mean, the old facetious saying is, why did Bitcoin go down? More sellers than buyers. Why did it go up? More buyers than sellers. So really its own universe of, money flow.
Which is really funny, because I bet there are people that actually believe that, and they know you say it because it's the usual expression, and they know very, very well that you are fully aware of that.
People don't like that answer, Oh, why did this go up?
No, I'm trying to say that, one of the stupidest expressions ever that, we keep using up to today is more buyers than sellers. For every single transaction, as you know, more than anybody else, you've been in this market in several different capacities, is for every transaction you need one buyer and one seller. The question is, how willing are the buyers and how willing are the sellers, right? I mean, how much value the buyers are willing to put in an asset, and how much willing sellers are to get out of an asset. So regardless, until Gregor gets here, which is going to be any minute now, let me show two things. First of all, yesterday we tagged perfectly the equality target from the first leg lower to the second leg lower. That's at like 24.76. Actually, we did that today in the after hours. Yesterday we tagged the upper range of this horizontal support area. Today in the after hours we also tagged that equality target. At the same time, VIX is slightly diverging. You can see this. I mean, VIX
can't break through 26.
Yes, exactly. So that's one more thing that we have to take notice of. So, I wouldn't be very much surprised if we saw a rebound from here. At the same time, the Nasdaq touched the channel support. At the same time, the IWM, if you remember, Coach, we were looking at it together. We had said that, this is my next target in the IWM. It's the 133 50 area. Why is that? If we zoom out, we can see that it's a confluence of supports. Most importantly, one of them being a horizontal support area that was acting as support multiple times in the past. So we made it here. So we're also currently on top of quite an important level.
Isn't the NASDAQ, Steve, the only index that is not taking out the January high? A January low, I mean. Every other index has taken out the the early year low, and NASDAQ hasn't yet, I don't believe.
Yes, you are actually right about that, because NASDAQ had the wildest acceleration, following that. It has been one of the weakest, not the weakest, because the Russell has been the weakest.
Right.
But yes, you're right about that. And the Dow Jones also, as you see, on very key support area. So every single US index at the moment is right on key support. So if and VIX, as we said, is diverging. So if there is one one day that can produce some kind of a rebound, this can be it, right? Because obviously the risk reward ratio is not for somebody to be trying to sell when every single index is on important support, right?
Yeah.
By the way,
emerging markets should get most of it back from yesterday, considering what's happening in the dollar too. You've been covering that on a relative strength basis for weeks now. EEM has not been making new lows, has it?
Yes, that is correct, and I'm going to show it. By the way, the yen, sorry, the Nikkei, as you see, we were expecting that it's going to make this move lower. At least one more leg. This is what I drew several days ago, and we did make it lower. But as you see, also the Nikkei stopped on quite an important support resistance zone. So this is also an index that has tested, a few hours ago, a key support area. Anyhow. Gregor is here and he can't stay until the end of the webinar. So let's pass it to Gregor to see what he thinks about yesterday's move. And then I'm going to go through, because we have a lot more to see. I think we have some interesting technical formations that developed yesterday. And, we have quite a lot to talk about. Do you have a guest, by the way, today,
yes,
Dale?
Yes, I do. Anka at Trade Out Loud.
Okay. So, Gregor. Good morning, mate. How have you been?
Hey, I'm fine, thank you.
What do you think about yesterday's move that we saw?
Whiplash.
I mean, it was, as you know, fundamentally everything was expected, but after this breakdown that occurred following this rate decision, I would probably. There are probably even more investors that are trading even more aggressively to the bearish side now, because the market actually told them to look in this direction. So from that point of view, I'm just seeing market moving into some extreme pessimism. So I would not be surprised actually if we stabilize at these levels that you pointed out.
Yeah, I think the fear greed index at some point yesterday was at 5. From 0 to 100, it was at 5. So,
yes, it's if, like we already discussed last week, if anyone is interested in stock market, then I think now we are approaching those levels where.
Yeah, and I think you were here when I showed that almost every single index is currently testing major support area. Huh?
Yes,
almost all of them.
Yes, and here is the first one. I'm looking at the S&P 500 here. What I really like, that we went below these February levels, and now this can be seen even as a temporary breakout if we will try to recover. And in such case, I would become probably even more bullish. Now, notice that we are now in a wave C of this complex correction, exactly at this equality level compared to the wave A, right? So here's the 4-hour chart, maybe a better look. Okay, so this was 5-wave drop for a wave A, then flat for a wave B, and then we have seen move lower into wave C. And also notice that we are now slowing down below February levels at this trend line, potential trend line support of this channel. So of course, what you want to see, if you're on the bullish side, you want to see a rise. So I'm waiting for potential bounce maybe from here, maybe from even lower levels, but the important is that I see a 5-wave from the low and move back into this wave 4 area. In such case, I would be probably looking for longs against the low, obviously. So I'm just observing how this will play out. I mean, if this is also a wedge, we are now at the lower side of this wedge. So of course we have to be patient here and wait on a break through the upside, for the upper trend line to make sure that market is going higher. Also, if we take a look at German DAX, firstly monthly chart. Okay, I have adjusted the wave count here on the monthly, and still, I mean, it looks very clear. We have wave 1, 2, extended wave 3, and now we are in a wave 4 pullback. This fourth wave pullback of a lower degree was what? This was 4,000 points, and now we are in making a very similar pullback here. So I think that in the next couple of weeks we may see evidences of a bottom if I'm on the right side. Also,
we are exactly at the 61.8, by the way.
Of this leg.
Yes, of the fifth leg of the third one. Yes, we are exactly at the 61.8. Exactly.
So of course, but we have to be aware of a deeper, probably even better.
Of course, it can happen.
But the important is that we are still in this healthy uptrend if we look at the bigger cycle. Also, on the daily chart here, what we see is price declining in a fifth wave. And on the 4-hour, actually, this can be seen like a wedge here. Okay, so still, I mean, because of plenty of overlaps, because we are at, as I said, extreme pessimism here, because this breakdown actually occurred after the Fed yesterday. I mean, it really can be important timing for that cleared or hit a lot of stops from those who were long already before. So I would not be surprised actually if we are in the turning zone soon. But of course, for DAX, same like with S&P 500, you want to see firstly market to move quite sharply to the upside before we may say that lows.
The risk remain to the downside until proven otherwise.
Greg, last week you said 96.40, and I know I'm probably jumping ahead of what you want to talk about, but you said 96.40 was a line in the sand for the bull case in the dollar. We've taken it out today. You still believe that, 96.40?
If we take a look firstly on euro dollar, right? I mean, it's still in this choppy zone for the last 3 months. So I'm still wondering if we are already moving higher, which means if dollar weakness will show up, or is this only a 3-wave recovery, just another correction? Notice that we have seen today just a spike here above this swing high. So it appears that bulls are still not stable, right? So we may easily go sideways even if we consider holiday season. So I mean, it's
inconclusive. It's inconclusive, right?
Excuse me?
It's inconclusive.
Yes, very. I mean, I really think that we should easily just ignore this one and focus on something else, because I don't see any solid price action here, especially not from a trading perspective, at least not yet. But if we'll see starting to rise here with accelerating price action above this upward trend line, right, then I would probably looking for wave 3 and would say that we are already moving to the upside into wave C of wave 2 that I'm expecting, as you know, for a while now, but I'm just not confident about this low yet.
Got it. Thank you, buddy. Wizard, I mean. Wizard, buddy.
Also, what I wanted to highlight, forgot on this chart earlier, I'm looking here at the 10-year US note, and I'm looking at potential flat correction, okay? So I'm tracking this potential resistance area where market could turn back to the downside. Also, we have here an impulsive rise, so at least deeper correction may show up. And if that's the case, then I think that the S&P 500 could actually bounce. So this is kind of another.
At the same time, by the way, the bunds are threatening with a big break higher. Huh?
But they already broken through, or no? Just a second.
They're at the precipice, actually.
Okay. Just let me. I'm just looking at the bund. Just a second.
You know what fooled me yesterday quite a lot, and I would have probably you know, sold the initial bounce today if it didn't have momentum, and if I hadn't decided that since vacations are coming, you know, I have no reason to, you know, to push the rest of the days, because, you know, with the liquid holidays, you know, you never know what can happen. Is the metals, because both of the metals, gold and silver, produced very nice bearish key reversals yesterday on the daily, and you know, so far today at perfect levels, by the way, because silver did so after testing once again the rectangle's resistance at 1480. Gold almost made it to the confluence of resistances I was looking at, and you know, when I saw those big reversals, I was like, you know, that's probably a tradable high that we got today. And I really didn't expect that we're going to see such a prompt recovery, you know, during European hours, just within like half a day from the Fed. So
yes.
what is your view now with this happening? Yeah, I also have it as a wedge potentially in gold. So you think we might have one more high there?
I just think because of that such clear pattern that occurred yesterday, I was also writing on Twitter yesterday that I'm looking at gold, but I highlighted that if I will take gold, I will take it today in the mornings, because I want to see how actually market will act or respond after the Fed during the Asian session. So I didn't want to be too quick on the short side. I wanted to see stable price action or stable bears, if I can say like that. Okay, so
some slow recovery.
Yes, if market would be slow through Asia and early in the European session, then I would probably look for shorts. But since we recovered very quickly, I mean, and we haven't seen any follow through, it's just saying to you that bulls are still not done. But I'm sure that there were a lot of shorts that were already active yesterday, and they have probably stops at the highs. So ending diagonal in such case is a perfect scenario. I mean, we may easily see a push to the upside, clear those stops, and then return to the downside.
And then reverse. Yeah, very likely. Very likely.
Yeah. So and also I have another here wave count here for gold. First one is, as you can see, ABC rise with a 5-wave, like an ending diagonal here for a wave C. And here on the right, I am tracking waves 1, 2, 3, 4, 5, and also expecting a reversal. So from a new high, definitely I think this could be very interesting to see a pullback, a deeper pullback. Okay, so we are also approaching this upper trend line resistance. So we'll see what happens. But of course, I don't, once again, I would definitely not be shorting at the highs. I would wait on much stronger decline first, something like this.
Yeah, I totally agree with you. I mean, I was hoping that I would see today some kind of a, you know, very slow, creepy, you know, retracement of, to sell.
Because you mentioned candlestick formations, right? So those candlestick formations are always confirmed when the previous high or low is broken. And in our example, we haven't seen that.
We haven't, but as you very well said, this is not the price action that you're hoping to see after a bearish key reversal. You would be hoping to see a much weaker, recovery. That if you zoomed in lower time frames, like the 1 hour, it would look like some kind of a flag or, you know, something like that, and then you would be like, okay, now it's getting ready, you know, to plunge lower. But you know, I don't like it.
Yes.
Yeah, that key reversal was a bear trap. Pretty unusual too. What a bear trap.
Yeah.
Yeah, so
ouch.
Yes.
Yeah.
Ouch. Ouch. I mean, but we are still not at the highs. I mean, right?
No, we're not. If you mean typically, yes, it has not been invalidated yet. So theoretically speaking, yeah, I mean, it can still work out, but you know, this is not the price action I would like to see. You know, we got some.
Also, we have seen yesterday and today follow through on crude oil. So if risk off moves will come to an end, then I think we really should be watching crude oil. So I'm expecting a bounce on S&P 500, expecting a bounce on DAX. As I see 10-year US notes moving into resistance, and at the same time, I see crude oil falling into this fifth wave. As you know, we were tracking this triangle for a while, and we have seen a nice push to the downside. And also, if you look sub-waves, you can easily count 5 waves of decline right into this fib area. So I think that even crude oil can be down in late stages of this drop, which means market or a new turning point can be around the corner. So this one actually is somehow matching with the S&P 500.
Yes, that is true.
Very, very important.
That is true. And obviously, a weakening dollar can only help if that's the case. And yeah, we said that triangle could have been terminal. This is a nice confluence of supports. I actually had bought the low, and I even had an order to buy more at 45.50, which was the 61.8. I pulled out my order to buy more at 45.50 because, as I said, we're headed into you know, vacation period, and I'd rather not have a real exposure. I was considering before like taking profits on my long, like actually closing it just above break even. I haven't done it yet. I want to see how this day is going to go. I might keep it. As I said, I was almost ready to close it at almost no profit, but I was, you know, then I thought, okay, it's a 1/4 of a position, so you know, just let it be. So I'm leaving it for now, and we're going to see how this is going to work out. But as you said, I do like it as a low, as a potential low here. Triple confluence of supports. It's the 161.8% extension of the triangle's range. It's the 61.8 from the 25 low, 26 low that we had to the high. It's also the 88.6% fib from the move higher that we had after the correction in 2017 that finished during June. So, you know, quite a nice confluence of supports here. Grega, I don't know if you have noticed, but for example, I wanted to talk about a couple of pairs from a technical perspective, but why not combine the two views? The Kiwi, so the Kiwi against the US dollar, has actually formed head and shoulders formation. If you go down to a 4-hour chart, you can clearly see it. And it's currently retesting the broken neckline. We broke below the neckline following the GDP data yesterday, and it's now retesting the broken neckline as resistance. What do you think from an Elliott wave perspective? What would you count here? What would you be looking for?
I mean, if we first take a look here on the left, this consolidation, I still think it's ongoing. I'm tracking an A, B, C, D, E pattern. So
I see this is the weekly chart, right? So
yes,
this is a long-term view. Yeah.
Yes, I will go to the lower time frame as well to give you perspective why I'm looking there. So I'm expecting another ABC structure which could actually take us higher to this trend line resistance. Okay, so the important is that here reversal from the lows was in 5 waves, and this is the wave count that I'm tracking. So this is wave 1, 2, 3, 4, and wave 5, and now we are in a pullback. So I would assume that this pullback is probably going to be more complex. ABC, X, and another ABC. Okay, so and then I would probably looking for more upside. I mean, we have seen nice decline, as you said, through this neckline, which is now retesting. So maybe we are now in a wave B here. But the important is that previously we have this overlap. Okay, it can be an impulse. So I think that this whole decline is going to be a complex correction.
Yeah, you don't have to persuade me. Unfortunately, I agree. And I say unfortunately because, you know, I was showing it to Stelios and he was telling me, why don't you make a pattern in play? And the reason I'm not is because as you saw there, this is such an easy to read 5-wave up from the lows that, you know, it's, I mean, you don't need to be an Elliott wave expert to see that that's a 5-wave up. So this is exactly what's stopping me from being short the Kiwi. The fact that I think that there is a high chance that we're never going to fulfill the downside target of the head and shoulders formation, which is at 65.93.
Yes, I mean,
so the Kiwi had a 5-wave up and the Aussie did not, because I know you're still long-term bearish Aussie, Grega.
Yes, because Aussie against New Zealand dollar, as you know, has
broken down. Yeah, we've shown that. Yeah, it has broken down from a very, very long term. I think it's like a
year and a half or so.
5-year-old long, something like that.
5 years? Wow.
Something like that. It's a very long-term symmetrical triangle. So this is a very important breakdown, which, you know, I don't think you should go against it.
Got it.
Yes, and also if we take a look at the daily chart, I mean, if we are here in ABC still in a wave 4, maybe then this decline on Aussie will actually resume after this wave 4 is completed. So we are now still probably making this corrective.
Grega, that would fit very nicely with the potential of gold being in an ascending wedge, having one more leg left higher, right? I mean, for example, the Aussie can complete that C for wave 4 when gold pushes higher to a new high for a fifth of the wedge. Huh?
Excuse me? Can you repeat, please? Because I was
I said that since you're looking for one more high in gold within an ascending wedge for a wave 5 of the wedge, at the same time, then that might be the
yes.
Yeah, that might be the point that Aussie will push for level for wave C and then begin, you know, wave 5 to the downside.
Yes, exactly. And also, but what we have to keep an eye on Aussie against the dollar is where's the stop in chart? Is this level at 71.64. If we will see an overlap with this one, then this corrective rally, okay, would be larger compared to the previous corrective wave 2, which was of a higher degree. So in such case, I would probably looking for even bigger correction on Australian dollar. Okay, so I mean, this upcoming session could be very, very important regarding the Aussie dollar. And of course, if gold will make just a failure break to the upside above yesterday high. So it will be a very key levels here.
Yep, absolutely. What do you think about the cable? The cable is within a wedge, retesting now like confluence of resistances.
Last week, I mean, it's still very. I don't
this
like
looks
it.
corrective.
Yes, I don't like it. I mean, if I would have a choice, I would not follow it because I mean it's so unclear. It was moving to the downside, but bears were not so clear, not so strong. So I'm just waiting whenever we will see a very strong reaction, but probably to the upside. So I'm looking for prices to be trading currently still in a wave C. It's the same thing, the same scenario like with the euro. But the only question is if maybe this is already bottomed or we have another low in front before we turn to the upside. But I assume that in start of January we will know more about that.
The risk reward, as long as 127 is holding on a daily closing basis, would favor one more leg lower, as you've drawn there.
Yes, and also you can see here that we are still trading to the upside, but some kind of a slow move here.
Yeah, it's like a wedge.
Yes, I mean, I really, honestly, I really don't like it at all. It's definitely not offering me any interesting setup in the near term. Definitely not.
Okay. What about the breakdown that we finally had in the USD yen? What do you think about it?
I'm just looking at it, and actually we could be stepping here finally into this wave C of a wave E. So probably we are now in the final stages of this triangle, but I see prices falling in a fifth wave here. Okay, so be aware of a corrective rise, or I should say it arises at least in 3 waves. And if stocks will recover, which I expect, then of course, as you know, dollar yen could really face this limited downside here. And of course, we must not forget on the 10-year US note as well.
Yes, that you think it's approaching a high, right?
Yes. So if
so if yields will start going back up, Grega, we should be looking for an important low in the yen or just a correction in the yen?
I think we should be looking for dollar yen to stabilize, and maybe if this wave E would be smaller, okay, because this wave A previous swing low was at 111.30 around there, so it's not far away, okay, and we may complete this pullback earlier than we think if, of course, 10-year US note would dramatically turn to the downside.
Thank you.
Or we will simply stay sideways, because after all, it's a very big range still in play here. It's same with the euro dollar. Actually, we haven't seen any significant break on any of the direction yet.
Okay,
but
so
you have one heck of a long-term view. Once we come out of this triangle, it looks like you have C up at 134 on the weekly, and if that's going to happen, you would think that the bonds would re-enter a higher yield period, sharply higher yield period, and sharply lower bond prices after the yen is done correcting.
Yes, I mean, definitely we have the charts that are suggest that we will see this direction, as I showed you earlier. So at the same time, we will also see a period of euro coming down strongly as well. And as you know, we have also their targets much, much lower. But I was expecting a bigger recovery on euro dollar during the same phase like we see wave E to the downside now, that euro dollar will probably recover towards 1.18.
But you got your expectation in gold. That was a great pattern in play, Grego. So the euro didn't pan out yet, but the gold did. Do you have any explanation for our viewers how gold was able to perform the way it did without much help from a weak dollar? It's a tough one, huh?
Yeah, I mean, I was looking for, on the long side of gold, I wanted to trade the market which is in a very strong position, and back then it was gold that was doing much better than any currency compared to the dollar, right? So euro dollar was very weak. Aussie against the US dollar was very weak, but gold back then was still acting good and was very strong, and that's why I loved gold more on the upside than any other currency against the dollar.
Okay. All right. That was a great call. 1220, I think, was your entry. Nice. All right.
Yes.
Steve?
Okay. Perfect. I'm here, coach. I was just looking at.
Oh, I got scared.
No.
Oh, good. You're here. You're my
okay. I leave you, and we'll maybe jump in tomorrow if I will be around.
Okay. Thank you very much for giving us, your update.
Love your work, Wizard.
Thank you. Love your work too.
Always nice to have you.
Steve,
Bye-bye,
I have a couple of thanks, Gregor, by the way. I have a couple of things to mention.
Absolutely, Stelio.
You did mention the New Zealand GDP came in weaker than expected.
Yes.
It's interesting that the Kiwi is actually pairing some of its losses from the initial reaction, but still it doesn't look great. The other interesting thing that happened today was a currency that we don't actually cover at ForexAnalytix, but we always look at it, and that's the Swedish krona. And we had the interest rate decision. Expected no change at -0.5%, and they actually hiked 25 basis points. Yeah, which was surprising. But then what they did is it was a dovish hike, so they hiked 25 basis points, signaling that they want to get out of negative interest rates. But they brought down the curve, the forward curve of rates. So they're actually projecting less hikes.
What the Fed did, in essence.
Yeah, exactly. So yes, that was interesting. Obviously, the krona is strengthening because at the end of the day, a hike is a hike when it's unexpected.
You know something, they gave me a very nice present because I was still holding that short USD SEK position from it feels like an eternity back. So I will probably close that today as well. Now I can close it in profit, like a 0.4, 0.5% profit to get rid of it, because to be honest, this looks more like a symmetrical triangle to me. So I would really find it likely to see one more push higher at least. Speaking of the kroner, and I know that you're looking at it, one of the currencies that is actually performing amazingly today is the NOK. We did stress out, this is what we drew several days ago exactly. We did stress out that the NOK was testing confluence of resistances, and even if it did make it above this, just a little bit higher, we had another confluence of resistances. So I really did expect that we're going to see some type of a pullback very, very, very soon. So far today, this is like a large evening star formation. So it looks like a good signal for some kind of a corrective move lower. But on the positive aspect for the bulls, we did rebound after retesting this previous high here. So it's a good start if you're looking for USD NOK weakness, and I do think that perhaps this can be the catalyst to see some more weakness, perhaps to come back and retest this broken trend line. It's the long terms. It's the long-term channels trend line resistance. We can retest it perhaps as support before resuming to the upside. But this is one of the currencies I wanted to show because it's one of the big movers that we had today. What other news did we have? Stelio, we did have good data. By the way, the BOE was a non-event, Stelio, right?
It was a non-event, yeah. And it's actually interesting because the BOE under Mark Carney have been, not always, but really very, they all toe the line, right? It's always 9-0. There was a time where there were a couple of dissenters, but really 9-0, it was a non-event. We did have some good retail sales numbers out of the UK. The currency didn't move, it didn't even budge. Probably the reason is because the good numbers were on the back of the Black Friday sales. Apparently there was some really good activity, around those dates. But clearly the main driver for the UK is not an economic number at the moment. It's still Brexit, so we'll wait for that. And I think it was announced that 9th of January is the date that they're going to vote for the deal, I think, or something like that. I did see a date flying around today, 9th of January for the UK Parliament. But yeah, so that's what happened really. Not much else that I can remember.
Okay. Yeah. Okay. Nice. So yeah, we
also had Philly Fed manufacturing a few minutes ago, actually 25 minutes ago. It came in quite a bit weaker than expected, but in the aftermath of the Fed, it didn't register either. So
yeah. I think it's a detail in comparison. Yeah. Okay. Cool. So that has to do with what we have from the macro events. And okay, so I already showed the NOK that I wanted to show. I already showed the Kiwi. Now I want us to have a look at the Kiwi yen, actually, because the Kiwi yen did is producing some kind of a move lower that, in my opinion, isn't done yet. I expected that perhaps we might have a little rebound before lower from here, but this might happen from that level. So I think that the Kiwi yen, might have more left to the downside. I would be looking for 76, 76.20, that area, to act as resistance from this point on. I think it's, this leg lower seems impulsive. I think there should be at least one more following this. The USD Swiss is one of the currencies that tells me that there might be more upside. There might be more upside for the euro, simply because this looks to me like it might be a consolidation after the first leg lower, in which case we might have one more leg lower towards the 97.50 area. So I'm not 100% sure, because there is a different way to read this price action. Perhaps this was the small triangle. We had one more, one more push lower, and this was it. But I'd rather interpret it like this. I think it's a more likely scenario. So I wouldn't, I wouldn't rule out another push to the downside for the USD Swiss. I think it's quite likely in the short term. Now, what I was talking about before with Grega, this is what I see in the cable, and I think that the cable is at an interesting juncture at the moment, because it's retesting previous horizontal support areas resistance. It was the breakdown level, and as you see, this looks like a pennant. So this price action is slow, is overlapping, it's choppy. So if we do hold this 127 level on a daily closing basis, in my opinion, there is a good possibility that there is one more push to the downside before we actually can produce some bigger rally higher. Now, I think that we covered the vast majority of the rest. Let me see if we have questions, though, because I haven't opened the question box yet. Yeah, copper, absolutely. Let's have a look at copper. And before copper, I'm also going to show, because we had a conversation about this in the chat room, the USD against the Chinese yuan. So USD against the Chinese yuan is currently testing some confluence of resistances, but this whole formation might as well be a triangle, right? So we're currently in the middle of this. So personally, I wouldn't be doing something, but if you want to trade it short term, I think that, this is some resistance area you might want to take into account. Now, ideally speaking, and seeing the move to the upside, I would prefer to see some kind of an eventual resolution to the upside for one more push higher before then seeing a deeper correction. But, it's anybody's bet, because as you see, it has been coiling, for a decent amount of time now. Now, having to do with copper, retested yesterday the broken trend line support as resistance. It failed, and it's doing this once again today. So it's going to be important what it's going to do from here. I actually sold only 1/4 of a position due to being in holiday season, so I don't want to have any real exposure to care about. I sold 1/4 at 268.5, so just below here. And I'm looking to see what's going to happen from here. If we get rejected anywhere between here and 273, 274, I think it's going to look good for a continuation towards the 61.8 target at 246. If not, then probably it's a different kind of a formation, or it's a different kind of a consolidation, and we might remain choppy for a longer period of time. So I think it has the benefit of having a very well-defined risk-reward ratio, so you know exactly what to do with it, and how to handle it. Coach, is your guest in the house?
Yes, Stephen, just a possibility on copper that may be the fact that it really didn't follow through to the downside may tie in with what you and Grega were saying, getting closer and closer to a S&P low. Yeah,
potentially recovering the risk. That might be the case, indeed.
Yeah,
that might be the case.
Great review, great show. Oh, it's not Friday. I can't say great week yet. Okay. Yes, Anka Metcalf is here. Anka did a great interview last time. I'm very grateful. She accepted to return, so I'll just proceed. Anka, welcome back, and I'm going to make you the presenter. Look forward to speaking with you again. Welcome back to FACE. Look at that chart.
Oopsie, I don't know which chart I'm sharing right now.
You have the S&Ps.
Oh, I have the S&P here. Can I switch to a different screen?
Sure.
Let me see.
It'll give you that option of which screen you want to show.
Okay, and by the good morning, Dale, and good morning, everyone. It's nice to be back.
Oh, thanks so much, Anka. I'm so glad that you decided to return. Last time we were talking, what a different environment. Do you remember when it was? How long ago?
I remember. I think it was like more than a year ago, I believe.
Okay.
Yes,
Right,
and we were definitely in a very bullish market environment. It was a pullback buy scenario pretty much in all the indices.
Right,
So,
buy the dip, buy the dip, buy the dip, and now sell the rip, sell the rip, sell the rip. So it's been pretty treacherous. I do recall last time you said you had no problem trading either side of the market, long or short. So
no,
how have you been handling the treacherous nature of this? Because before the last couple of weeks, it was real whippy. You'd have huge up days, failing spikes, and then the support would hold, and then another big rally. So I found it a difficult environment. How about you?
I think that any trader that has been trading this market for a very long time has found this market extremely difficult. And it is funny that you mention it, because there are a lot of posts and a lot of things that are out there, and I'm receiving a lot of emails that this volatility, you can make a killing in this volatility. I think it's the other way around. I see this volatility as being very dangerous, and here's one of the reasons why. You do get the follow through, and this volatility works for us in terms of follow through, but at the same time, as a very active day trader, I find it very hard to take part in any of these big moves that are occurring, because of the risk. The stop loss levels are huge for any kind of day trader. I mean, I'm a day trader that likes to trade more of a median time frame, and I like to focus more on the 5-minute chart, 15-minute chart. Yes, so for that specific time frame, I find it very, very hard to actually place multiple trades within a trading session because of the risk level. So if you look at any setup that is occurring in the Dow, and I'm speaking about futures indices, in the Dow, in the mini S&P, or even in NASDAQ or Russell, the ranges have been extremely, extremely wide. And if you do not consider these wide ranges, you very easily get kicked out of the trade before even having a chance for that follow through to happen. So this has been an extremely challenging period, not only for myself, but I think that for all the traders that are market participants in this market. And we have to be very, very careful, because the market snaps up or snaps to the downside in a fraction of a time. I run a trading room, and when I'm in the trading room, oftentimes, I'm looking at charts. We do pre-planning for trades, and oftentimes I see a setup, and by the time I utter the entry, the trade is long gone. So the trade is already down. Let's say if we're in a short, it's already down like 15, 20 points, even 30 points. So I find it extremely, extremely difficult. I think that for any kind of time frame that you look at, and I think one of the reasons is probably, the algos that are pushing. And one of the things that I've seen in the market is that when you're having the setup form on any kind of time frame, you're going to see sort of like the slingshot effect. And what is the slingshot effect? It is basically, if you're looking to get long and you really define your support level, you know that you're going to give it a little bit of wiggle room so you don't get taken out by the algos or, by any kind of trail stop or anything of that sort. You're going to see the price push in before releasing more to the upside. Oftentimes I see this happen. So the support resistance levels that are developing on smaller time frames are very, very delicate, and you really have to have very, very deep pockets. And I don't think that this is a market for small account holders because they can literally get whipped out. And I find it a very, very challenging market environment.
Well, you know what would really clarify it? Okay, a year ago, you're day trading S&Ps on a 5 and a 15-minute chart. What was your average stop loss back then?
Back then, it was around 2 to 3 points max.
Okay, so that's a blink in the eye. So now what? Now what is it?
5 to 7.
It's what? 5 to 7?
Yes, 5 to 7. 5 to 7 points, not ticks, but points.
Right.
Yes.
Right. So it's doubled.
It has doubled.
Doubled your risk. So that says it all. So even on a short-term time frame where you could really kind of be precise or more precise, and you're not looking for as much when you're right, you've had to double the risk. So do you tell your people, since you have double the risk, to cut their leverage in half?
Absolutely. The risk is reduced to half. We have reduced the risk. I think it was in September. We have started reducing the risk exposure, and actually the market has been wiggly since September, so it has been a quite difficult and challenging market environment. And at the time, when this volatility actually has increased, I was actually engaged in some swing trades, and at that moment in time, I remember we were one of the last swing trades, and I haven't done any swing trades since then, active swing trades, like to hold them for, let's say 1 or 2 days or even more. But when I take swing trades, I often look at the 4-hour chart. So reliable, right? Higher time frame. It's sort of like the median between the daily charts and the 60-minute chart. And setups that occur on the 4-hour chart are somewhat reliable, very reliable, especially if you're in an ongoing trend. But right now the market is so difficult, and it is actually not worth it. It's in between, because if you look at, this is a discussion maybe for later about the trends and everything, but back then I took a setup and I had a stop for a swing trade that was about a 60 or a 70 point stop in the Dow, which is pretty okay for a swing trade and for a 4-hour chart formation, and that failed. I oftentimes use intelligent stops. What are intelligent stops? Basically, they're soft stops, so you don't have a hard stop in place. And
it's a mental stop?
Yes, exactly. It is a mental stop. So you let the index or commodity or stock or whatever you're trading, you're letting it move lower. But obviously, when you initiate the trade with definitely less risk exposure, so you're minimizing your risk for the trade. So let's say you get in with half of your position or a quarter of your position, based on that 4-hour rotation, you're assuming, obviously you're trading with a trend and you're assuming a continuation higher. But if it violates the support level, and if you have the price breaching the prior support level where your current stop should have been, you're going to let the price pivot before you place in the other stop, and then you add on the other half of your position, and so you're basically averaging down. But that specific pivot that forms, that becomes your hard stop.
Okay.
So no questions. So it's not like you're adding.
Yeah. So it's so you end up with a hard stop, because
exactly.
I do know people that trade without stops, but they're very, very disciplined traders, and they they know they're wrong, and they're just looking for a better out than the stop, or maybe they'll give it 5 minutes to see if it was a stop hunt. But it really takes a lot of discipline to use a mental stop. In fact, I have a joke that the last time I used a mental stop, my first stop was a mental institution. So anyway, you're scaling in because it's very hard to be perfect in this environment. So you're piecing in on a couple and then putting in your stop. So if the S&Ps have become more difficult because of the extreme ranges and how fast they're trading, have you gravitated towards any other instruments that have had less volatility? For example, currencies have had less volatility. They've been very quiet in comparison to stock indexes. Are you trading other instruments besides stock indexes during this time frame? And what's working for you?
I am actually super focused on the indices, gold and oil, and this is pretty much my trading universe.
Okay.
Sometimes when there are more or less swing trading opportunities, I gravitate towards copper and natural gas. And actually this morning I was looking at natural gas that it is trying to hook on the daily on the 50 moving average. So it's trying to do a constructive rotation off of that level.
Yeah, that's a beast. That can be a beast at times too, can't it, Natty?
Exactly. So you have to be extremely fast, and definitely I use hard stops when I'm trading copper and when I'm trading natural gas. I'm not stubborn. I'm very flexible in that point as to the directional buy, so I don't have any problem switching between longs and shorts. And I also trade stops. I have had a couple of swing trades for December. Actually, I think I had like 3 swing trades the whole month of December. I haven't had many. And I am trailing extremely tight because in this very fast-paced market environment, we need to be extremely disciplined and take profits immediately. It's not because we are not in a trending market right now. And I know that a lot of traders are saying, yes, we are definitely trading in a downtrend market.
Yeah.
Yes, but the thing is that the market has had so many issues is because we did not have a downtrend confirmation on higher time frames. It only just happened yesterday after the Fed meeting that the market literally ripped to the downside and has violated, in most cases, the February 5th lows, and is now trading well below. So now we can talk about a serious downtrend onto smaller time frames. But then again, we're looking for, let's say, a shift of regime right now into the weekly charts and onto the monthly charts as well. So I think that the turbulence came from the fact that we did have the asymmetric environment. Higher time frames were still dictating higher, and that's why we were having such strong currents to the upside, and traders were still buying the dips at certain critical levels. But again, we had the avalanche of the smaller time frames of the 4-hour charts, the 1-hour charts were dictating lower, and that's the conflict, and that's basically one of the reasons why we had this volatility and this shock in the market. And let's face it, this is a really choppy market environment, and I think it's probably here to stay. And unless we definitely, and I think that yesterday was the first test. I think the market just needs to digest these new lows to identify itself and see, okay, so where are we going from here? And I think that it is pretty obvious that, it held for such a long period of time. There was such a tug of war, especially on the weekly charts. It was a zigzag. It was sort of like a Christmas tree effect if you are using candlesticks. It was green, red, and huge weekly swings. I mean, incredible swings. And now that we finally literally just cut the cord and we broke lower, I think that now the price needs to define whether it really wants to push lower or it wants to rotate from here. But I think that we may have one leg lower. And I think that it's often very difficult to trade after an FOMC meeting. And especially I think this week is extremely difficult because tomorrow we have option expiration another doozy for the books.
Mm-hmm. Yeah, triple witch.
Exactly.
Quadruple.
And it's not your ordinary, exactly. It's not your ordinary option expiration. We have the quadruple witching option expiration, and it is going to be a very very difficult time for the price to establish and to show its true value. And now
we also have the winter solstice tomorrow, and sometimes there are shifts sometimes in markets on the change of seasons. I'm interested in what I'm seeing on your setup. What kind of moving averages are you using? On most of them, you have 3. On the crude, you have 4. But how do you use these moving averages? Do you look for crosses, pullbacks to them? It's really the only indicator on your chart, so I'm assuming they're important to you.
Absolutely. I do use volume as well. I'm going to pull up a chart with the volume, and this is basically I'm watching for price action, and I'm watching definitely for entries after I do my pre-market game plan. So basically, I'm a multi-time frame trader, so I like to trade in perfect synchronicity with all my charts. But the moving averages that I'm using are the blue one is the 20. Simple moving average, the green 50 simple moving average, the red is the 200 simple moving average, and I'm also using the 10 exponential moving average. I use the moving averages. Yeah, I use the moving averages because I see that there's a lot of pressure that is basically present at or around these moving averages.
They're like magnets. They're like magnets.
Exactly. Okay. They are, and they are alternate support resistance areas, and especially after let's say pretty much a crash that we had yesterday, and on minor time frames, it pretty much looks like a crash. And where you see the price that is getting very, very extended from these moving averages, you can pretty much expect a counter. You could probably see, you would actually see the price pull into the moving averages before the next release. I tend to focus more onto the 20 simple moving average when I'm trading minor time frames, when I'm trading my 5 or the 15-minute charts. And then you could see it very well work here. So this is another pressure point with the doji into the 20 simple moving average, and this is basically a really good short. So it's a really, really viable short here on the 1 hour that came in and triggered. So what I'm looking for is I'm looking for information as to where the pullback is going to be headed, and especially into this market where the price is releasing to the upside or releasing to the downside in such a violent mode, and then you're having the quick turnaround and then release back again. And I think it's a great gauge to use these moving averages. I don't use any other sophisticated indicators, and I think that it is very important to pretty much watch how the price is reacting. You mentioned the crosses. One of the things that I have mentioned, and throughout the years I have noticed, especially day trading for such a long time, I've been day trading for more than 16 years now. One thing that I find very intriguing and very interesting is that if the price is basically meandering in between moving averages, so let's say here we're going to get that rotation on the 1 hour, and if the price is going to hook above, so if this 20 SMA is literally going to try to push, once the price gets above the 20 SMA, and if the 20 SMA is going to try to push the price, I find that there is going to be a very choppy environment as the price is going to be in between moving averages, and that's
how about like this example you're giving right now, that there's confluence between the green moving average and a pivot point? So that kind of give you that give you a little bit more conviction about the trade when you see a couple of them coming together.
Absolutely, and I think there are a lot of things that are happening here on this 1 hour time frame. I think this is going to be a big decision point, and this is going to be a big selling pressure point, because this 23.5, let's say 590 here. Not only that, we have this confluence from the pivot point with the 50 SMA, but we also have minor resistance deriving from this prior pivot low. So this is a strong selling point right here. So if, let's say, there should be a rotation into this area, I'm using these confluence zones to establish my resistance. My resistance and definitely my target areas for the possible rotation higher. These are the most difficult patterns right now, because after an accelerated move down, you have pretty much the double, let's say double top, not quite, you have the lower high here, but sort of like the double top effect into the 450, also kind of psychological if you think about it. You know, those 50 points, a whole number of points, are also prone to buying pressure or selling pressure. But we had the doji, we had the rotation here. Now, one of the problems that we're going to encounter here is the fact that, are we going to have the follow through? Because as we're getting closer to the New York trading session, we really, and I think that the London session doesn't really know what exactly, you know, how the New York trading session is going to handle price. So you can see that right now we're trading below the 10 EMA, but it's not really into a sell dynamics, because it had a grind up. And oftentimes when we have the grind up, we pretty much come in a little bit, pretty much into a 25 to less than 50% retracement from the pivot low to the pivot high, and we rotate at this point and rip to the upside. So again, I oftentimes see this happen, but nonetheless, as long as we have the doji selling pressure here, what I look for, because obviously I'm not trading the 1 hour chart, but I'm looking for clues on the 1 hour chart. So I'm looking for a sell into the 320, and then I quickly navigate to the 5 minutes so I can have a better risk level. So 320 is right here. This is basically the trigger point at the 320. And now, instead of using that high point stop, I'm using a 5 minute stop right here. So this is how I'm transferring all my information from higher time frames to smaller time frames, because I'm looking for inflection points for points that can trigger on higher time frames that can offer the price of velocity of continuation, and then I'm looking to obviously use a minimum risk. So instead of using 420, I'm using 350, which is only from 320, it's only a 30-point stop here into the Dow. Okay. And I'm looking obviously for a continuation lower, but if you're only looking at the specific time frame, and I found this over the years very challenging. I know there are traders that are only, you know, like what you see here on the chart is basically what you get. So you're only focused on these particular time frames, but I think it's so important to focus more on everything else. So I'm going to show you a quick example here, just of my home screen. I'm going to drag it here. So as you can see here, I'm also looking at all the time frames. So 1 minute, 2 minute, 5 minute, 15 minute, 1 hour, daily, weekly, and monthly. So I get when I start my analysis, I always look at the daily and the weekly every single day, even though at the open, I focus more on the 1 minute. So I have strategies that are based off very small time frames in the first 30 minutes of the day. So in the first 30 minutes, I watch the 1 minute and the 2 minute. I think that it's very important not to have pretty much, you know, a focused vision on only the time frame that you're trading, but analyze it, take a step back, you know, and analyze the chart. And
so it gives you your biases looking at long term. Okay, so you come in with a bias based on macro charts, long-term charts, and trading short-term. Okay.
Yes, because I'm looking for follow-through, so I'm not necessarily looking for a scalp move, but I'm looking at the bigger picture, because I want to, let's say, chunk more of my profits into the zone. And
okay.
yeah, and moving from that 1 hour, because I just mentioned, you know, the doji into the 20 SMA. So definitely 320 was one of the entries. So this is pretty much where the trade has triggered. You immediately place the stop here, and definitely you're entering a very active trail mode. But as you can see, there are different formations that are happening. This is another formation right here. So this is another sell point. So if you're trading the 5-minute chart, this is a more accurate, I would say a more accurate chart, but it support resistance levels on a little bit a higher time frame are not as fragile as the 1 minute or the 2 minute or even the tick chart. So
Right.
they offer you
Less noise.
Exactly, and time, and you're basically buying more time. You are going to be in the trade for a longer period of time. You're not going to be shaken out as often. And by the way, you also have when you get the buys from a higher time frame chart, you know that, okay, so I have that rotation that is happening at that key location. There's a lot of selling pressure coming in, so you have your bias well established. So you know that you're going to look for what? You're going to look for a pullback sell. Again, this is another setup here that has developed into the 267 for the short and 290 for the stop. And you can pretty much look to the left-hand side of the chart for possible target zones into the next support areas.
Okay, Anka, for people that be interested in learning more about you and what you do, why don't you tell us about your business model, perhaps show your website?
Yeah, okay.
It's commercial time.
Commercial time. Yeah, I wasn't ready for it.
Okay.
I didn't know we were going to have a commercial break.
Yeah. Well,
Okay.
you know, you could talk about what you do. You obviously you have a trading room. And,
yes, I do have a trading room. Yes. So
okay, go
what
ahead.
I do, yes, we teach traders how to day trade and swing trade the equities and the futures market. We have 2 big classes that we have offered for the last, I would say, 7 years. These are the trading education classes. We have swing trading for stocks and ETFs, and we have futures day trading, and we also have added, and we will have added the futures swing trading class. And definitely you could visit our website for more information on that. I also run a trading room. The trading room is open from 9 o'clock until 4 o'clock Eastern. I mainly specialize in trading the New York trading session open. It is a really good time to make money, and things are very active, a lot of volatility, and a lot of continuation patterns may be present into the New York trading session. So that's my favorite time to trade. We also have a full portfolio for all our trades that are posted live. Not only that, they're posted live with a timestamp into the trading room. I'm constantly on the mic. I call the trade, whether long or short, exact parameters for the entry, the stop, targets before the trade is even initiated. All my trades, by the way, I'm using limit orders for my trades, so it's nothing impulse, not buy here, sell here, nothing at market. So everything is really well pre-planned ahead of the trade development. We also have an auto trading program. What that means is that we're trading your money. So if you don't have the time to spend in front of the market, auto trading may be something that a lot of traders may look into. Maybe they have.
What do you use? Do you use a trade copier, or you have MAM or PAM set up?
No, we basically take all trades that are called in the trading room. We trade our clients' accounts. And we have a form here. If anyone is interested, they can fill out the form. We have full transparent track record for 2017 and 2018, including commissions and monthly fees, and everything. And all our clients receive the broker statement. At the end of the day, everything is extremely transparent. So this is something for the trader that does not have the time to spend in front of the markets, or a trader that doesn't necessarily know how to trade and how to take advantage of certain moves that are occurring in the market.
So let me understand this. You trade other people's accounts. They can choose their broker, or you have a recommended broker?
We have a recommended broker.
Are you an IB?
No.
Okay, so you have a recommended broker. Do they have to sign power of attorney to let you trade their accounts?
Well, no, they don't. But if they're interested, they can find more information here. They can fill out the blank. Yeah, it's quite a bigger discussion here with the setup and everything. Yes, but basically what they do is they wire the funds. Basically, there are a lot of papers that are involved and a lot of agreement that are involved. And we have actually a representative that is actually in charge of everything and all the documentation and all the paperwork and all the requirements and everything else.
Okay, Anka.
So I'm handling the trading business, and my business partner for the auto trading program is handling the other side.
It's called compliance.
Yes, absolutely.
Okay. So Anka, Merry Christmas to you. Happy New Year. Wish you a prosperous 2019. Thanks for dropping in here today, and appreciate you sharing your methodology, and hope that you have a great holiday season and a bumper crop in 2019.
Thank you so much, Dale. I wish the same to you and yours, and I hope that all your longs go higher and your shorts lower. And that is for everyone. And thank you so much, Dale.
That's why I wear. That's why I wear suspenders. All right. All right. All right.
Thanks so much, Dale.
All right. Great to laugh with you.
Everyone.
All right. Have a Merry Christmas, Anka.
Thank you. Merry Christmas.
All right, everyone. That's a wrap for us. See you tomorrow for TGIF. Remember, don't just count your pips, count your blessings. See everyone tomorrow to wrap up the week. Adios.